Over the weekend, it was what most people in the news business despise, which is news breaking all weekend long. And it was for fairly big news as well, especially as the U.S. and China agree to slash the reciprocal tariffs for 90 days in a major trade breakthrough. We are joined this afternoon by business strategist Scott Bushke. And Scott, thanks so much for your time this afternoon. We certainly appreciate it. Just kind of your 30,000 foot perspective of kind of what this deal with China means moving forward. We know it's not anything completely finished yet, but it is looking like it's at least trending in the right direction.
Yeah, thank you. Yeah, obviously the devil's in the details, but yeah, this is a good news for the markets. It's a good news for business owners. It opens up, both markets to new opportunities, especially in the egg industry. It's probably one of the biggest winners here in the United States. That's been hit hard lately with a lot of tariffs and other things that have hurt them to be able to supply China at much lower tariffs than before.
So, Scott, what does it mean for overall businesses in America that have dealings with China? This is obviously a better situation for them. What are we going to get out of this?
Yeah, number one, it should stabilize everybody's supply chain. So many, maybe not the whole product, but pieces of the product, come from China. And, when large tariffs or uncertainty, costs go up, and someone's going to eat those costs, whether it's going to be the supplier, the distributor, the manufacturer, or, the end consumer or the customer, those costs go up. So with tariffs being paused and looking at 10% on each side, versus the 145 or 25 that it was, significantly lowers costs, especially anyone importing anything from China to finish off a product.
When you compare the two economies, when you compare the American economy and the Chinese economy, and you look at kind of what the damage toll has been thus far, who do you think has taken it worse? Has it been worse on China or has it been worse on the U.S.?
Yeah, I think it depends on who you read. But from what I've seen and talked with folks, I think it's been more damage on China than the U.S. Obviously, we've taken our hits here as well, but it's something that Trump came and said, hey, we're going to probably have some pain before things get better again. But he calls it a complete reset of opening up China to a lot of manufacturers or producers here in the United States. It's too early to tell, just what this will mean. But it definitely seems that, obviously the markets are responding to it well. And where I play is in the lower middle market or the small to medium-sized companies in the M&A space and been doing, helping business owners sell their companies or growth through acquisition for about 27 years. And what this brings is just stability. And stability is a good thing for business owners trying to make not only short-term, but especially long-term decisions of if they want to. Do they want to buy a company or not, or do they want to make large investments? So what we've had in the last month has just been this huge amount of uncertainty, and it's really, for the M&A markets, especially the middle markets and above, have put almost all deals on pause because there's just too much uncertainty to try to make a well-informed decision.
Scott, is there an average time like a business sits on the market for sale?
Yeah, it depends on the size of the company, but the spaces, the clients that we work with in that, 5 to 50 million enterprise value, most times they're going to be on the market for about a year. I think the average is about 11 months. But think about it as about a year from the time they go to market, find some buyers, negotiate, get to a signed LOI or offer, and then work through all the diligence and legal items and financing and get to close. It's usually about a year.
So I'm guessing your clients, you're obviously seeing what's going on, seeing things stabilize, probably expecting things to be able to move a little bit faster now, right?
Correct. Yeah, we think that if other countries kind of follow what we got with the UK and with China here, if these can truly play out the way the administrators have said, it should set up the second half of 25 and going into 26 is. Potentially a record year for mergers and acquisitions because they just need to understand what is the playing field, and now we can start making decisions. And if it's a better playing field than it was 6 months ago, all the better. Now, the last key piece would be for interest rates to come down, in the second half, which I've been in a couple of conferences speaking the last 2 weeks, and one group thought 3 cuts or 75 basis points by the end of the year, and the others said 2, starting maybe in August or September. So, the second half of the year should line up to be very strong.
Right. One of the objects or one of the goals of these tariffs was to generate income, essentially. And with
Right.
these tariffs being put on hold, being brought back down to pre-reciprocal levels, that money's not necessarily coming in. And I kind of wonder, like, how much is that going to hamper plans that the Trump administration had, to pay down the debt, right? I mean, pay down this deficit that we've got. I mean, that was all part of the plan. I guess that means we're kind of in a holding pattern at this point.
Yeah, that is not my area of expertise, but you're absolutely right. Is that that was going to be where a lot of income was going to come from, and I think they're going to look at it as hopefully it generates these newer markets and lower, less red tape and it was from the government and lower interest rates and just more overall business activity and more investment in companies will hopefully drive additional revenue, additional profits to get it on that side. But yeah, it's you and I both. It's got to come from somewhere at some point. But who knows where it eventually will.
I'd rather that sucking sound not come from my wallet, to be honest with you. But I have a funny feeling that's right. I have a funny feeling that's where it's going to be coming from at some point in time. Scott, when you look at kind of just the overall economic climate, and I know we've got people that are probably listening right now that are thinking about either A, starting their own business, or B, maybe looking at purchasing a business and moving into that kind of realm. What's the kind of the risk assessment for you on this? Like how risky of a move is that right now, or is it any more riskier, than it normally is?
It's. I would say that there's some things going on that you might want to look into, but you look back to the last 5 to 10 years of what we've had, and I think I say the new normal about every 6 months. So it's basically, what you really want to look at when you're buying a company is yes, there's things that you can't control, the economy, geopolitical, interest rates, financing, and things like that. But you need to look at what industry you get into, because there's in any scenario there's industries that have tailwinds, even with all the craziness that went on with the tariffs. American-made manufacturing and benefited from that for the short period of time because products were very expensive coming in from other countries, and they had a big price advantage from low-cost products trying to get into the United States. Right. But I think when you're looking at a business to buy, things that you want to look at are, what are those single points of failure? So that's what we always advise our clients when we're helping them grow through acquisition is, is the owner the whole business? Is he or she the business and there's just a bunch of, worker bees running around taking orders, or is there a management team there? Because even if the owner says, hey, don't worry, I'll stick around for 2 years to help you get everything transferred. Well, if they get hit by the proverbial bus tomorrow, right, you're in a big trouble because they had all the know-how and especially who has relationships with the top customers. Right. Because that's the biggest thing is transitioning those relationships from the top customers. And then you look at customers. Is that first customer, that top customer, is it 5% of your business or is it 55% of your business? Because you could have a company that's really successful and really growing fast and profitable, but if your top customer is 55% and you buy the company today and tomorrow they go, we don't like working with you, you're out of business tomorrow. You're done because your cash flow is dead. So it's those, and then are there good trained employees, or are they just churning employees left and right? I was on a talk last week about vibe interviews and hiring people just because they seem nice or you like them versus assessments. It's like, yeah, that's pretty scary to go on that path. That they're going to fit into your culture. Culture is important, but when they're not doing their job, culture is going to change real fast when nobody's doing the job that they were set out to do. So it's trained employees, a well-maintained brand and process. Is it trending up? Is it trending down? That's the problem too. Is that so many business owners sell they don't sell too soon. They typically sell too late because their identity is tied to the company. We see a lot, and we're trying to help people understand what that next chapter in their life is so they can get out a little sooner before they start to get burnt out.
I'm pretty sure that vibe hiring is how the crystal and incense shops in downtown Asheville do all of their hiring. So if anybody is looking for that, maybe smudge stick yourself or something like that, and head on down to the crystals shop and you get right in there, right in the door, almost guaranteed.
There you go.
Scott, We certainly appreciate the time. My guest this afternoon, business strategist Scott Bushke. And Scott, always great to have you on, my friend. Have a great rest of your day.
Thank you. Have a great day.